Well, we're now going to talk about unanimously our favorite topic, which is holidays. And the holiday season is upon all of us. There's a wedding season as well. It's been full-blown this time, I think the best in the last 5-6 years. Let's take a look at what this means for hotel rooms, for demand and businesses. Last we spoke, Indian hotels had occupancies at 70% and average room rates for Q2 were around 11,000 rupees versus about 8,700 rupees pre-COVID. Puneet Chhatwal, the MD and CEO of IHCL, joins us now to talk about that. Puneet, a pleasure speaking with you, and this is turning out to be one of the finest seasons that we've seen for the hospitality industry in a very long time. I remember the last time you spoke to us, you said that Q3 would be one of the strongest quarters in the last 10 years. And by the end of this year, you're looking at, I think you targeted about 5,600 crores of revenues for the full year FY23. Do you think you could do better than that?
Good morning, Sonia and colleagues. You're right. I said Q3 will be the strongest quarter. There is nothing that I know today which makes me change that statement. Demand is very strong. The wedding season is very strong. The business on the books is very strong. October, November have been good. And December is touching new heights. So I think all in all, we are very pleased so far with what we have seen in Q3. The 5,600 number was given by Mangalam. I never gave that number. So I would like to put a disclaimer on that. But yes, we will do well. And we will be definitely within or exceeding the guidance that we have given to the markets during our investor call and our results meeting, and also within the strategy of Avant 2025.
No, absolutely. Puneet, hi, good morning. The end of the second in Q2, Q2, of course, as you explained after that, was the fact that it's the weaker of the 4 quarters. Q3, of course, is the best. Margins, etc., are going to be, in that sense, very strong. You're saying that October, November has been very good, and December, no reason to believe it will be otherwise.
Yes, yeah. That's correct, Prashant. The margins are really driven by the pricing, and the pricing is driven by the balance between demand and supply. So demand continues to outpace supply, which means your ability to charge is higher. And Sonia said 11,000 rupees is a rate when you convert it into dollars is less than $150. We have a way to go. Rates all over the world have skyrocketed in the last 5-6 months. And even if we were to target 30% of comparable hotels and comparable cities or partner cities, I do believe that the rates will grow, and rightly so, because the rates in our sector on the domestic front have not really grown if adjusted for inflation in the last 10 years. So I think it was high time for the rates to increase.
Travelers like us, Puneet, if rates go up, I mean, the last time you said that luxury rates are going to go up by 25 to 30%.
I still maintain that. I still maintain it will be 25 to 30% increase in the luxury sector. Okay,
and doesn't bode well for people like us, right, to travel. But you also mentioned that, your margins could be closer to about 30% by the end of the year. With rates rising so much and the demand kicking in, do you think there is a potential to unlock higher margins than what you've spoken about?
Well, I think it's very relative. The good news is that we are talking about 33 at the end of the business cycle by 2025. That's the guidance we have given. We maintain that. We would like to exceed it. But, if we turn the clock back almost the last, let's say, 2010 till 2017, our average for the year was not even 15, 16. So if you're doubling those margins, based on the snapshot of almost like 10 years ago and an average of 5, 6, 7 years, I think the sector that way and us in particular would have done very well, because we all know hotel industry is both capital intensive and a labor intensive sector, which is the reason why global hotel brands, and we are also a global company, find it very difficult to touch 30%. So if you're touching 30, we're doing exceptionally well.
Hi, Puneet. Morning. This is Nigel on this side. Puneet, I have many pleasant memories of Sea Rock. You guys have taken it over. The brokerages, well, some of them believe that that's a trigger as well. What's the pending formalities on that investment? And what is the total investment on this asset, Sea Rock?
See, Nigel, we have not yet done the full planning of Sea Rock. It's still in a planning phase, and we are discussing with the city of Mumbai. We're also discussing with, BMC, MSZMA, and then the matter will be referred, because it's a very large development, it will go to the center for approval. All I can say is when you have me back within 6 months, not the next quarter, but the next 2 quarters, will be able to give some guidance. I think it's a great opportunity to have that mega development together with Land's End and to create the next landmark for the city of Mumbai, just like our founder Jamshedji Tata created the landmark in Kolaba. This could be the landmark in this era for the next 100 or 200 years to come.
Okay, well, all of us have great memories of Sea Rock, right? Especially if you were a child that was raised in Mumbai. But tell us about the new properties. I'm most interested in that. What is the outlook? By when do you plan to reach that 300 hotel target? And what can we look forward to over the next 6 to 12 months?
See, on Friday we signed or Thursday we signed our 250th hotel, which is going to be the Taj in Riyadh. Yesterday we opened a phenomenal, very nice business property in Jaipur. We were always known for our palaces, the Rambagh, the Savai Man Mahal, the Jai Mahal, the Devi Ratan. But yesterday we opened the Taj Amer in Jaipur. We are absolutely on target or even ahead of target to open 18 hotels this year, which is the guidance we had always given. We will open 1.5 hotels a month, and we would sign 2 hotels a month, which means signings of 24, which get added to the pipeline, and an opening of 1.5. I think all of our brands are growing very strongly. Taj and Ginger both are destined to hit 100 hotels very soon. Let's say within the next 6 to 12 months. And that is phenomenal because that would make Taj one of the exceptional luxury brands across the globe to have 100 hotels. And also we are continuing on our selective growth on the international front based on management contracts instead of doing single asset acquisition, which we did, let's say 20 years ago. So all in all, I think from a growth point of view, we are very satisfied. And I think our growth is a leading example for the hospitality sector in terms of last 3 years, having the highest number of signing of rooms, hotels, opening of rooms, opening of hotels. So, and I don't see this trend changing, at least in the next short term or mid-term, as as and how you would like to call it.
Right. Puneet, sort of zooming out from Indian hotels to looking at the sector, you've been someone who's spoken about Indian hotels, but also, of course, been an advocate for the industry as well. And this is an important industry, as the recently released GDP numbers showed us, right? The contribution of what they describe as trade, hotels, and transport as a category grew some almost 15%. But in absolute terms, the sector is pretty much the same size it was in 2019, which was pre-COVID. And the graphics are all up on your screen. As the consultations start, industry feedback starts, representations to the government are made as we head into the next budget, what should be, in your opinion, done? Because this is people intensive as well, an important kind of linchpin in the employment generation aims for the government. Go on.
Thank you, Prashant. I think that's an excellent question you raised because it's an opportunity. It's an opportunity for the country. And as you can see, the Q1 was even 25%. As the sector was badly hit, the good news is it's back to 1920 levels, but the rate of increase in the jobs is on the way up and is exceeding any other sector in India today. More importantly, this sector globally creates the maximum number of indirect jobs. In India, the data is a bit tweaked, as we all know, because some of the jobs are in the unorganized sector. So if we were to adjust for that, I think the opportunity is huge. the contribution of tourism and hospitality sector is expected to reach 3 trillion by 2047. If we get this sector, the infrastructure status at the center level and the industry status at all the states of India, I think there will be a huge increase in the investment in this sector. So while constructing, you will have jobs. While building infrastructure, you will have jobs. And once the properties open up, more and more jobs directly in the hotels would be created, but also indirectly in terms of vegetable suppliers, in terms of other supply chain. So it's a huge opportunity and is definitely in line with the government's endeavor to create new destinations under the Udan scheme, new airports, etc. So I think if the sector was positioned and granted the proper status that it rightly deserves, I think these numbers could look much better and assist India in getting as close as possible to a double-digit GDP growth in the years to come.
Okay, all right, Puneet, thanks so much for stopping by. And on that optimistic note, we'll wrap up on this interview, but we look forward to having a chat with you rather soon and wishing you a rocking December. Looks like things are full up at your end. Well, let's move on then. The cement space has been buzzing around. Pricing has improved. Demand on ground